Okay. Yeah. Good morning, guys. My name is Dr. Chuk Sanyang. I'm your forex trader, and I'm going to be your chief instructor in this, trade analysis today. Okay. So, guys, I did promise us. First of all, let me tell us Happy New Year. I did promise us that this year I'm going to be sending out signals in a real, dependable and reliable signals that you can take off from your live account. Okay, like if you can see my screen here, I have a live trading account from Hantech, okay, Holdings. Okay, this is my live account. Okay, but I'm going to do this analysis on the demo account. It doesn't matter, it's the same thing. Okay, so guys, what I want you to do is just to follow me. I'm going to teach you how to do your analysis. Okay, now first of all, we're going to be going technical. Okay, we're not going to look at much fundamental issues here. First of all, I want to teach you how to do technical analysis without bothering about what the fundamental space is all about. And of course, what the fundamental space is saying is already factored into the technical background, okay, into the technical outlook of any currency pair you're going to look at, and I'll tell you why. Okay, so guys, let's start by doing our top-down analysis. Okay, we're going to do top-down analysis. We're going to look at what this market is doing from a monthly time frame. Okay, so let's see on a monthly time frame what is happening in this market. You see what I told you, the fundamental factors are factored in. Okay, they're priced in. Okay, now look at, on a monthly basis, this market has been trending. On a monthly basis, this market has been in an uptrend. So what else are you looking for? It shows you how dominant the pound is against the Japanese yen. Okay, this is very, very key. All right, it shows you that the British economy, has shown sufficient resilience, irrespective of their challenges. Okay, they've shown resilience, and the currency pair has been buying for a very long time since. Okay, let's just zoom in. Let's just zoom out on this chart. Okay, guys, I want to show you something now. Okay, let me show you something now. Since June, okay, let's grab the crosshair. Okay, you can see that since 2020, okay, since I think it's February 2020, this market has been in an uptrend. Okay, this is instructive. This is very, very instructive, guys. So on that basis, we're going to choose our directional bias to be a buy trade. Okay, so we're going to be looking for a buy trade opportunity in this market. Okay, all right, so now let's even look at the news calendar. Okay, let's go to the news calendar and see what the market is doing. Okay, so let's go to the news calendar. If you go to the news calendar, just refresh your browser. We're going to be using forexfactory.com. all right, so if you look at Forex Factory, you will see for the rest of Monday, we're not going to have, there ain't going to be much, there's no high impact news, for that currency pair for GJ. Okay, so if you look at it, you'll see that there's no Japanese, news, and there's the Great British Pound news here is not a high impact news anyway. Okay, so we're going to be cruising here. But if you look at on Tuesday, you also see that Tuesday is the coast is clear, as it were. The coast is clear on Tuesday. All right, so for me, this is just enough. Besides, I'm a day trader. Okay, so it's day trading that we're looking at. We're going to close out our trade at the end of each trading session. Okay, at the end of the New York, at most at the end of the New York trading session, we should be out of the market. Okay, so we are not going to stay beyond that. So these other days may not concern us, except we decide to enter a trade in any of these days. Okay, guys, I hope you understand me. So we've looked at the news calendar to see what is happening. Okay, guys, let me give us another insight. If you come to look at the central bank rates, look at the Great British Pound rate is 4.75. Okay, then when you look at the Japanese yen, you see that it's less than 0.25. Okay, so there is a lot of gap in interest rate between these two currencies. So, and that's why you see, the market is uptrending, because the higher interest rate will be buying while the lower interest rate will be selling. Okay, so this is how you could also, this is also a hint for you to select your currency pairs. Choose the first 3 currency pairs on top of the central bank rate, and the last 3 currency pairs to trade your currency pairs. It will help you because of the interest rate differential. Okay, all right. So guys, let's go back to our chart. Now, if you look at this chart, you see that the market is in an uptrend. Okay, so I will overly be looking for a buy trade opportunity in this market. Okay, now this is the monthly time frame. I'm not going to take my levels from the monthly time frame. I'm going to take my levels from the weekly or daily time frame. But since I'm entering from the 5 minutes time frame, I'm going to take my level from the daily time frame, guys. That is how I trade. All right, so let's go to the daily time frame. Now when you go to the daily time frame, you see that this market, the market has closed in on the last trading day. The market closed bullish. Okay, bullish, but a spinning top. Okay, a spinning top. All right, so what we are looking at now is an opportunity to buy this market. And now if you put the Fibonacci retracement to see the depth of this retracement, you also see that the market retraced at a key Fibonacci level. Okay, at a key Fibonacci level of what, 38.2%. This is also instructive. All right, so this is a key level, and the market is reacting off those levels. So guys, I will use the Fibonacci levels to mark my support and resistance levels. So the levels I'm interested in are the golden ratio, the 50%, the 38.2%. So what I will do is that I will just come and put my horizontal line on those levels. All right, put my horizontal lines on those levels. All right, because I'm going to be dropping down to the 5 minutes time frame. Okay, so you put those levels there, and you put this level. So these are the key levels I'll be interested in this market. Okay, now you could also use the 0 level for the resistance. Okay, so you can actually take this up to a 0 level as your resistance level. So these are my key levels, okay, in the market. So guys, we are now going to drop down to our entry time frame, which is the 5 minutes time frame. Okay, and we're going to see how price is reacting off those levels. All right, so guys, that is how we're going to trade. Okay, so you can see that the market has really pushed away from those levels. It's not a problem, because when you zoom out on the chart, you will see clearly how price has been respecting those levels. Okay, you can see how price has been respecting these levels. Okay, so what we're going to do now, from where we're standing, is to use the moving average. Remember, this market is trending. All right, this market is in an uptrend, so your best bet is to use what? Is to use your moving averages. Okay, moving averages will help you, to gauge also, to also add confirmation to your structure levels. All right, to add confirmation to your structure levels, guys. So what I'm going to do now, I'm going to introduce my 25 moving average. Okay, is a trend indicator. So 25 moving average is what I'm going to use as additional confluence for this trade. Okay, all right, you can see that the market prices are also respecting what? Are also respecting that moving average. So it's very instructive for me. Let me zoom in on this chart. Okay, all right, so what I'm looking out for, I want to see price action at the 25 period moving average. Okay, so if I see a chart pattern, or sorry, a candlestick pattern at this level here, that I can decide to, you know, look for entry opportunity, guys. Okay, decide to look for entry opportunities. Okay, so guys, the other thing I want us to look at here is this. I want us to note that if you can see how the price is creating higher highs, okay, creating higher highs. So at this point, the market has created a higher high. So we want to see how price will react off this level. Okay, so what I can do again is this. I can also use my Fibonacci level, even though this is a lower time frame, but it will help me to gauge the level of retracement as well, because price, they say, is fractal. Okay, so guys, so what I want to do, I want to come to this low and also apply my Fibonacci levels, okay, up to this high. Okay, all right, so you can see that I have two Fibonacci retracement tool on this market, on this chart. Okay, so you can see that how price is also respecting these Fibonacci levels, okay, respecting the 50 level, respecting also the 61.8 level. So I will go, you know, I'll follow these levels very critically. Okay, I'll follow them very closely. So I'll wait for price action to come to this level, and I can bet you that the moving average will also be moving with these key levels. Okay, so that's all we have for GJ. Okay, so let's go for EA. All right, so when you look at EA, I've already marked up this chart before now. All right, so all I'm waiting for, my directional bias is a buy. Okay, I want to buy this instrument. Okay, so you can see that price has already closed above the zero level. Okay, so this zero level is also structural. If you look at it to the left hand side, you see how price is reacting off that level. Okay, so I can actually put a horizontal line here. You know, you can see what I'm telling you. All right, so I trade support and resistance a lot. So from here, we're going to monitor this market. Our directional bias for EA as well is a buy trade opportunity. Okay, so what I want to do now is that I can also introduce the 25 moving average, or I trade just the support and resistance level. So if you look at this market, you see that the market has created a higher high here. Okay, so if you try to trace price action or market structure, you see what I'm telling you. Let me just make this bold. Let me make this bold because I want to trace price action. Okay, so this is higher high. Okay, this is higher low. Okay, all right, and this is another higher high. Okay, this is another higher high. So this is what the market is doing. Okay, so all I want here now, I want to see price to close above this level. When price closes above this level, I'll look for what? I look for a buy opportunity. But then, where are you going to put your stop loss? Where are you going to put your stop loss at the next, you know, lower low, as it were. Okay, at the next higher low. Sorry. So once price closes above this level, I can wait for a pullback to the level, or I just, you know, take a trade that will give me very good words. That will give me very good risk to reward ratio. All right, that will give me very good risk to reward ratio. So guys, just watch me how I'm going to do this. Okay, I'm looking at this advanced market structure. So I want to take my trade. I want to take my trade at the break of structure. Okay, at the break of structure. So if you follow me, you understand what I'm doing. So I need price to close above this structure level, then I can enter this trade. Okay, all right. So guys, that is another trade opportunity that we have for EA. So another currency we're going to look at is NZD, CAD. Okay, now if you look at this market, you see that, you know, you may not going to have much interest rate differential here. Okay, so let's look at New Zealand and Canadian dollar, you know, from the central bank. So New Zealand and Canadian dollar, you can see that they almost have interest rates that are very close to each other, but the NZD is higher in terms of interest rate than the Canadian dollar. Okay, but again, what we are going to look at is these are risks on currency pairs. Risks on, we have risks on and risks off. Okay, so when you look at it, you see that all of them, they're all commodity currencies. Okay, New Zealand is, is a great, huge exporter of iron ore. Okay, iron ore and gold, as it were. Then Canadian dollar. Okay, Canada is also a high exporter of what? Of crude oil. Okay, so if you see the direction crude oil is moving, the Canadian dollar should be moving in that direction as well. Okay, why this should follow the New Zealand should follow the what? The Chinese economy, because Chinese imports huge raw material from New Zealand. Okay, from New Zealand. Okay, and also gold is also a commodity that New Zealand exports. Okay, so let's go back to the chart. Okay, let's go back to our chart. All right, so we're in the 1 minute time frame, so I need to go back to the weekly time frame. Let's see what the market is doing. All right. All right, from the weekly, monthly time frame, guys, you see that the market is doing what? The market is in a downtrend. All right, the market is in a downtrend. If you look at it, you see that the market is making what? Series of lower highs. Okay, the market is making series of what? Lower highs. And when you bring your trend line tool, you see that it will tell you very clearly that the market is in a downtrend. What that means is that the New Zealand dollar is stronger than the Canadian dollar at this material periods in time. Okay, so what do we do from here? We just have taken our directional bias from this chart. Okay, so we'll be looking for sell opportunity in this market, guys. Okay, so we'll come to our daily time frame to mark our levels. Okay, now when you come to the daily time frame, you'll see that indeed the previous week closed bullish. The last trading day closed bullish. That was last week Friday. It closed bullish. So the market has pushed up and we expect it to push down. All right. So, and if you look at this market, you see that the market is again trending downwards. Okay, the market is trending downward and has printed a what we call head and shoulder pattern. If you look at this head and shoulder pattern, you see that it's a bearish reversal pattern. And indeed, what is happening is that the market is pushing down. Okay, the market is dropping, or price is dropping, as it were. So what do you do from here, guys? Very simple. Excuse me, I'm taking some tea. So what do you do from here? You can see it's early in the morning that I'm doing this recording. Okay, GMT plus farm. If you're in Nigeria, it's early in the morning. If you're other part of the country, you just look at your time, okay, your clock, all right, to know how early this recording is going. All right, so guys, so what do we do from here? We take our levels. Okay, we take our levels, but this market is trending. So since the market is trending, I may not bother to take horizontal levels, because horizontal levels will just be, price will just be skipping it, breaking it up and down, as the market is going down. So what I will do is this: I will go down to 4-hour time frame to see if I could pick levels. Okay, now when I come to the 4-hour time frame, you see that there are certain levels that price is respecting here. Okay, so those levels I will mark them up just with horizontal lines. Okay, take this level. All right, take this level. All right, and take this level. These are the levels I'll be interested in this market. Okay, these are the 3 levels I'll be interested in this market. All right, let me adjust this a little. I think this should come somewhere here. Okay, fine. All right, so these are the levels I'll be interested in this market. Okay, so now I'll drop down to the 5 minutes time frame, because guys, we are day trading, okay? We are day trading this instrument, all right? We are day trading this instrument, and what that means is that you're going to be in front of your chart to monitor price action, okay? So we can see this market is pushing down very aggressively, okay? The market is pushing down very, very aggressively. So what I want to do here, I want to put on my what? My moving average, all right? I want to insert my moving average and go with my 25 period moving average, okay? All right, so guys, you can see what the market is doing. Now, I want the market to react off my horizontal level and my moving average, okay? It doesn't matter. I may decide to change the strategy. But what is important is that I've been able to identify my direction, the direction I'm going to take in this market, and I'm going to short this instrument, okay? So as it is now, price is playing around price action. So there's nothing I can do at the moment, okay? So I will hold on. But let's look at the other markets, okay? You can see that price has closed above this structure level, all right? So let's just remove this this markups, okay? All right. So price has closed above but there's a key level above here, okay, that I have marked up in the past. So I want to wait for price to come to that level, then I'll look for an opportunity, okay? I look for an opportunity. So we can also remove this Fibonacci intermediate level and just follow the horizontal support and resistance levels, okay? So what do we do here? Let's delete this, okay? All right, so let's keep monitoring the trades, okay? Price has come to a structure level. Price has come to a structure level. It's dipping. I need a close above the moving average, okay? I need to see a close above that moving average. So remember, what we're looking at here is this zone, okay? We're looking at this zone. All right, we're looking at that zone. So all right, so when we see price action around there, we would just hit the button, okay? We put the trigger. All right. All right, so let's wait for price action around here. Then we'll decide what to do in this market. Remember, our directional bias here is a buy trade, all right? So guys, this is how we trade. So let's go back to, let's look at this other market, okay? The market is still going on. Let's look at NC. The market is still going on, all right? So let's look at Euro USD this time around. So let's do our analysis on Euro USD, all right? So guys, if you look at Euro USD, you agree with me that let's remove all the markups, okay? Let's remove all the markups on this chart, all right, and start afresh, guys, okay? I want us to start afresh, all right? So what we're going to do now is that we're going to go to the higher time frame, which is the monthly time frame, to look at the market structure, okay? So guys, if you look at the monthly time frame, you agree with me that this market is in a downtrend because it's doing lower highs, okay? It's doing lower highs, okay? So the market is in a downtrend. So our directional bias will be to short this instrument, okay? So guys, we have chosen a directional bias. When you draw your trend line, when you draw your trend line, you agree with me that this market is in a downtrend, okay? All right, so let's remove the trend line. All right, so now the next thing we need to do is to go to the daily time frame. Let's go to the daily time frame. Guys, just follow me. I'll teach you how to trade this market, okay? Now, if you look at this instrument, you see that the instrument is somehow behaving like Euro AUD. Sorry, no. It's somehow behaving like NC, all right? somehow behaving by IC. Remember, our directional bias here is a sell. All right. So let's go back to Euro USD. Now, the Euro USD chart we're seeing here is also a trending market. Okay, so our horizontal support and resistance may not really work well here. So we're going to use our moving average. Okay, but let's drop down to the 4-hour time frame, closer to our entry time frame, to see if we can identify some key levels. Okay. All right. Yes. So we can identify some key levels, and these are the levels. Okay. Here. All right. Here. Here, guys. All right. So these are our key levels for this trade. All right. So what we need to do now is that we need to now drop down to our entry time frame. All right. So our entry time frame is the 5-minute time frame. Remember, I said we are going to be trading the 5-minute time frame. All right, because we are day trading. All right, we are day trading. All right, we are day trading. Okay. All right. So remember, our directional bias is a sell, but you can see what the market is doing now. Okay, sorry, I think there's something wrong with my charts. I need to, there's something wrong with the chart. I need to be sure that the market is connecting. Okay. Yes, let's hold on a minute. Let me observe what is happening here. This chart is not resetting the way I want it to reset. So, all right. So let me zoom in. I'll reset the chart again. All right. So there's something wrong. The market is not. The server is not connecting properly. The server is not connecting properly. The server is not connecting properly, okay? I need to see price move. Okay, so yeah, the market is moving now. So let me zoom out. All right, so guys, so this is what we have now. This is what we have. So you can see that price is still far away from my structure levels. I'm looking for a sell opportunity. So I wait for price to come to this key level. Okay. The other thing I can do here is this. The other thing I can also do here is I can see. I don't like the way this chart is behaving. So let me drop down to, let me go to 15 minutes time frame, okay? If it's behaving like this, you go down to the next lower time frame, okay? All right, so all right, so I need to, okay, so if you look at this market now, you see that the market is showing you an uptrend, an overly uptrend, okay? An overly uptrend, all right? But you're in a 15 minutes time frame. So what I would suggest is that you have to wait for price to get to a structure level. Wait, let the price come here, okay? Let the price get to this key level. Then you wait for it to start pushing down, okay? You wait for it to start pushing down, because your directional bias in this trade is a sell trade opportunity, okay? There are buy opportunities. Guys can trade counter trend, okay? I'm not saying that it's not possible, but if you don't have experience, please don't trade counter trend. Only trade counter trend if you have experience, all right? And I can trade counter trend. I can trade counter trend, because what the market is doing now, the market is overly, pushing up, okay? Higher highs, okay? So, but it is approaching a key level, All right, it's approaching a key level here at this number here. So I want to wait for that opportunity. Okay, the other thing you guys can do here is that let's use our round number. Use round numbers to do what? To refine your levels. Okay, so I can make this 0, 0. Okay, I can make this 0, 0. Okay, for that level refinement. Okay, I can also come here and refine this level because I want it to be as close to round numbers as possible. Okay, good. So fine. So these are round number levels. All right. So guys, you can see that we've been able to analyze these markets starting from the GJ. Okay, so you can see what the GJ is doing. The GJ has actually closed above what? Has actually closed above. There's a candle closed above the moving average. Okay, I can actually short this market here. Okay, I can actually short this market here, but there's a key level above it. There's a level above it. Okay, but that's not a problem. So my confirmation indicator that I want to use in this trade is my 2-line MACD cross. Okay, 2-line cross MACD. All right, so you must have your very important confirmation indicators. They will help you to confirm your trade entry. Okay, my own confirmation indicator is what? Is the MACD 2-line cross. And if there is no cross, I'm not going to take that trade. And I want to see a proper cross. I don't want to see cross, above the 0 level, or below I want to see a proper cross, from below to the upside. All right, since this market is trending. All right, now another indicator that you can use is stochastic indicator. So if it's not giving you what you want, you can go to the stochastic. These are very important indicators that you can use to confirm your entries. Okay, fine. You can see the stochastic is giving me a buy signal already. Okay, so what you can do, you can actually hit your buy button here, but make sure that your loss size is appropriate. Okay, so I can actually push my buy button, all right, and say buy. Okay, you can actually buy this instrument. Okay, so let's go and look at our let's see what is happening in the market. Okay, it's like I have some trades running in this demo account. So what I need to do is that I have to close them. Okay, they are demo accounts. I just use those trades to demonstrate one or two signals for my students. Okay, so I have to delete them. I use them to demonstrate trade for my students, so I can actually put on another trade. Okay, can actually put on another trade. All right. Okay, so that is where we are here. After you've done that, you can just come and remove your confirmation indicator. You don't need it anymore. Okay, then you just monitor price action. Okay, monitor price action. So we expect price to still pull up, down, and continue. All right, so we entered here because we felt that the right signal has come, even though I think we entered this market a bit late, because close above this moving average would have just been the appropriate time to enter. But that's not a problem, because I still need this candlestick here to show me that the market is overly bullish. Okay, so that's how we're going to do this. So let's go to the other trade. All right, if you look at what is also happening here, you see that we are already pushing up. All right, we're already pushing up. I want to trade the horizontal support and resistance here, so I'm not going to use the moving average. Okay, then here we need a close below the level, or when the price gets to our key level, we'll look for opportunity to enter the market. Okay, so for this EU, the market is still doing price action. It has not gotten to our level yet. So guys, this is where I'm going to stop this video. I don't want it to get too long, but at least you get my idea, and that's how we trade. All right, you can choose your trading time. The reason why I decided to enter this trade is because I've seen an opportunity here. This is actually about the closing time of the Asian session, okay? About the end of the Asian session, but I don't have a problem with that, because the next session we're going to have is what is the London session, and this currency pair is going to move very well during the London session, guys. So that's why I just felt that the Japanese and the Asian and the London session will give this currency pair a very good momentum and volatility. All right. So these other ones you could wait during the London session. You look for opportunity here. Then here during the London or the New York session, you look for opportunity. Here London or New York session, you look for trading and entry opportunity, guys. Okay. So that's why we're going to stop this video today, guys. I hope you enjoyed the video. If you like it, hit the subscribe button to encourage me to do this video, and give me a thumbs up, so that anytime I do this video, the YouTube algorithm will provide them, make them available, for you to view. All right. So guys, thank you very much, and do have a blessed day. Bye bye.